The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, and we have markets in positive territory. And I say it like that because it was quite a dip lower last night on NVIDIA earnings. But guess what? We're only about 50 pennies away. We're at 181.09. You closed at 181.60. Now, that doesn't mean that's how it's going to go on the opening bell. Okay, there's still volatility priced in terms of what could happen on the open. Sometimes you don't get that reaction until we actually get the opening bell. But right now, if you were a buyer of volatility yesterday, not a good proposition. You were a seller of volatility yesterday. There's still going to be, volatility priced in for the day's action, even though we've climbed back. But pretty remarkable as you have the NVIDIA, within $1 or where we were last night. You dipped down to a low of 172. We'll talk about their numbers. But the market claws it back. A little bit of negative reaction in the S&Ps. Now, you look at the weighting, okay? And just even on the screenshot of the video that's at the top of the article within Bloomberg, S&P 500, 8.1%. The NASDAQ 100, 10.1%. S&P 500 tech sector, almost 24%. That's in terms of NVIDIA's market cap. MSCI World, almost 6% of the MSCI World Index. So, it's an important one. And let's take a look at the charts first, and then we'll get into the actual numbers. NASDAQ 100, they clawed back, right? Actually to positive, up by 12 from where we were last night. Dow up by 70 points right now, 45,710. And you have the Russell up by 0.5% at 2390. Bitcoin up $1,000, 113,245. You have crude chopping around near 64 at 6406. We check out gold up by $6. Now, you got to check out yields. You got to check out the dollar. And we get the 10-year right now. We're negative by 2 ticks. We were all the way up to 112.19. And taking a look at the daily on the 10-year, because we're getting some higher price, lower yield, and you've got a 10-year at about 4.25 right now. Okay, 4.25. You were all the way up to 112.19. Excuse me. And that had us with the yield approaching 4.2. Okay, I think we got down to maybe a low of 4.21, but you see it right on this chart in terms of challenging the higher price, lower yields of the middle of August, the beginning of August, July 1st, as well as May 1st, critical level. And if we break through that area, higher price means lower yield with the 10-year pushing almost 4.2%. So as you push lower yield, we got dollar weakness. Dollar continuing under pressure. We're under 98 yet again. We're at 97.99 right now. You take a look at the daily on the dollar. We've been pushing this level since April 17th, folks. You got as low as 96.37. Now, when we were back there, you actually had the yields exactly where we are right now. July 1st is when we made a yield low in the 10-year of about 4.19. So if we're going there, dollar's going to be continued under pressure right now. We're at 97.98, and gold with a little bit of a lift, pushing 34.55 right now. And all things considered, gold has only traded above where we're at on a couple occasions, folks. Okay, one of them was the irrational high that came about for the fake news on tariffs. And then you have this high out here from June 16th of 34.76. And you got that spike high around the tariff volatility in April at 35.09. We hit a high of 34.67. We'll take a look at the weekly real quick. Let's expand that box, right? We are just consolidating at the top of the range right now. And you got some nice volume at the top. But that may be irrational, and you got more volume on the downside here. That bounce last week, one of the lightest volume weekly bars we've seen in gold since June 30th. So get your spikes up on gold as we challenge those highs, even though I think in the longer run, and this could be the breakout, okay, we're going to be watching yields, and you watch that dollar. As you take a look at this dollar, take a look a little bit of a bigger picture. You go back for a 5-year weekly. And yeah, you know, with where rates are going to be in the short term, folks, the risk is in the longer term, okay? We've been saying it. There's no risk in the shorter term. Drop the rates to zero. They're going to be raining cash everywhere, right? The risk is to the longer term. On a shorter term basis right now, there's a lot of pressure for lower yield and a weaker dollar. And it's going to be interesting to watch that yield curve as you've had some of the longer durations actually going up, because there are risks that are presented for obvious reasons. Okay, let's talk a little bit of NVIDIA. Now you jump over to NVIDIA. Quite a run. As I mentioned yesterday, you're adding almost $2.5 trillion to the value of this equity since April. 2.5 trillion added since April. You have a low out here of 86.62. You have high of 184. You're almost up $100, and there's 24 point something billion shares. So let's call it 25 billion shares, up $100, 2.5 trillion, just under that number. Remarkable acceleration, and we're going to hold that number, it looks like, as we're within about $1. And I shouldn't say we're going to hold that number. We've held that number overnight, but let's talk about some of the numbers. Now, the data center revenue was actually a miss, okay? And I'm going to scroll down to the number that was probably what freaked out the market or freaked out the AI bots, etc. And here it is. The data center unit, larger by itself than any other chip maker, had sales of $41.1 billion. The average estimate was $41.3. The reason why they beat was because gaming-related revenue, which, as the article says, used to be the main source of income, $4.29 billion. Analysts were looking for $3.8 billion. So in the area where they were supposed to take in $3.8 billion, which was gaming, they beat by 15%. Okay, they took in an extra $500 million on an estimate of $3.8 billion. And an area that the market cares about right now, which is the data center unit, they actually missed by $200 million. A small percentage. Automotive segment, $586 million. Basically nothing when you're talking about where this equity trades. Now, you talk about margins, okay? Check this out. I think this is the Wall Street Journal piece. Same thing going over NVIDIA, okay? Even NVIDIA has speed limits. Strong AI chip sales come up a bit short for the market's only $4 trillion company. And hey, it's about expectations, right? Check out this gross profit margin per fiscal year. Fiscal year 2025, they're going to be pushing 75%. I just told you their data center revenue was $41 billion, right? Surging 56% year over year to that 41 and change billion number, falling just short of expectations, and that was the reaction, okay? The outlook remains strong. They're going to add $7.3 billion in revenue in the current quarter. And how about those margins, man? Okay? NVIDIA's gross margin hit 72.4% in the latest quarter and is expected to end the current fiscal year in the mid-70% range. We'll talk a little bit more. We're coming back, folks. Markets in the green. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps right now up by 7, trading at 65.03 right now, within literally single digits of all-time highs. And that's with NVIDIA roaring back in the overnight. NASDAQ 100 up by 24 points or 0.1%. The Dow up 0.2%. The Russell leading the way up by 0.5% at 2390. Jumping back to some of those NVIDIA numbers. So we talked about missing a little bit, and yeah, where's that going to hit? Well, we'll see how some of the spenders are going to react today in terms of the companies that might be trimming how much they're spending on the edges. You're talking about the Amazons, the Microsofts. And the other thing that they had in here that I found interesting was that I was trying to get the exact quote. You know, you look at these numbers and then you look at the valuation, right? The margins are amazing. We see $3 trillion to $4 trillion in AI infrastructure spend by the end of the decade. Well, let's just say it's $4 trillion. And by the end of the decade, you're talking about 5 years, okay? Even if NVIDIA captured every dollar of every AI dollar spend in the next 6 years, and they had 100% gross margins, you still wouldn't recoup what it cost to buy the company. And that's not a fundamental valuation, but it is a consideration, because I think if somebody ever came to you and said, my valuation is this area is exploding, this area is going to spend X amount of dollars over the next 6 years, And our company is valued at the entire infrastructure spend of AI over the next 6 years. Now, they have a $60 billion buyback in here as well. I also found myself saying, man, nobody can compete with this company. And meanwhile, they have so much cash, they're giving out buybacks. It's quite a... But they have a new... $60 billion buyback. There was only about $17 billion, I think, in their last buyback that they had out there. And buybacks in vogue, as we were talking about yesterday. Check out NVIDIA. All right, as we always say, we'll see where supply equals demand on the open, but yeah, we got some strength in this market. We jump around to some of those cloud competitors. Amazon, slightly in the green right now. You're up by about 0.2%. You jump over to Microsoft, up by $2 at 508. Jump over to Oracle shares, chopping around. We're at 236. You check out some of the other chip stocks. AMD, charging high with NVIDIA, up by $1 after driving lower last night. And Intel, up by about 20 pennies as well. All right, we'll take a little bigger pictures. Second reading of GDP. U.S. economy expands at 3.3% rate. Yeah, annualized pace. That's the second estimate from the Bureau of Economic Analysis showed Thursday. That compared with an initially reported 3% increase. It's unfortunate that I do find myself saying every time we get an update, you do get first readings, you get second readings, just like that happens with the jobs picture. And I imagine no one's getting fired when the data goes from first reading to the second reading and it's good. And unfortunately, the case is when you get bad data, people get fired these days. And eventually that may matter. I know we shift into politics, man, but you get all these data prints, good data, revision data, it's going to get talked about, right? It's a big number. It deserves to be, man. 3.3% annualized pace, quite an economy. Business investment expanded at a 5.7% pace. Latest figure, stronger than the initial 1.9%. I mean, I chuckle because if you ever went from 5.7 to 1.9 and GDP went from 3.3 to 3%, people would literally be getting fired. And there's your GDP number. It's a big number, man. The market's rocking, without a doubt. Yeah, that turnaround followed the first quarter contraction. That was the first time since 2022. But as we talked about, there was a lot of funky stuff going on with trade. And the imports in the, there you go. Net exports added nearly 5 percentage points to GDP, the most on record after weighing on GDP in the first 3 months of the year. So, if you remember, folks, net exports, added nearly 5 percentage points after that was what sucked down this number on the prior quarter, And even at that time, it was like, hey, this GDP number is not the economy crashing, folks. Do not give Trump a bunch of grief just because everybody, that we had no net exports because everybody was importing everything, right? Well, guess what? Now they're going through all of that stuff they imported to avoid the tariffs. So what happens? Net exports are a big add to GDP. Guess what? That's going to go away. They're going to start having to import stuff again and pay the tariffs. Everything's not getting made in America, not just yet, Goods and services that aren't produced in the U.S. are deducted from the GDP calculation, but counted when consumed. So there's some funkiness going on in those GDP numbers, and don't believe the number that was so far negative, but on the flip side of that, you may not believe this side is as pronounced as well, Because that's a big number, man. Net exports, adding nearly 5 percentage points to GDP, the most on record. That number's not going to stay there forever as some of this pull ahead of imports will subside. And NVIDIA getting upgrades everywhere, man. It is, they're big numbers to put it lightly, right? $46 billion, in a 90-day period and taken almost 75% to the bottom line. How about that for a business? Check out some of the banks. JP Morgan slightly higher right now. Bank of America, speaking of buybacks, these banks, looking yesterday. First time we hit $1 trillion in buybacks this early in the year. And NVIDIA throws another $60 billion on. Take a look at the price and volume in the S&Ps. Yeah, no real volume on that pullback yesterday. Okay, we're chopping around at these highs. And that was a nice day of strength. You go back 6 days ago, last Friday, but as I was talking about, couldn't quite get it going, even versus some of the volume we had last Wednesday. You take a look at the NASDAQ 100, even less pronounced, right? Look at all this action. Look at the action we had last Friday on the volume front on the NASDAQ 100. Okay, compare that to how you're selling off. Compare it to how you sold off in the end of July. But guess what, man? NVIDIA holding up well. NVIDIA does not have that volume lacking. Some decent volume. Rebounded yesterday, and we'll see how it opens when we come back. We're coming back for the opening bell, folks. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have equities open and NVIDIA goes green. How about it, baby? We're up by 0.2%, up 51 pennies. And as I was talking about yesterday, you had about a $6 move priced in either direction. Some of those theoretical trades we were talking about selling some volatility. Now, what will happen is, okay, if you were trading those options we were talking about yesterday, they have exposure through Friday. So you don't make all that money immediately, folks. There's still a move priced in, rightfully so, for NVIDIA, and you're seeing why, okay, as we take off to the upside. How about that? We're about to break all-time highs, man. Boy, you talk about the bar for a company, as in, where is the bar? They've met the bar from how the market's reacting, up by 1.5%. Microsoft up by 0.3%. Amazon up by a similar 0.3%. We jump over to Apple shares are flat this morning. Tesla up by 1.1%. Check out some of the other tech companies. Oracle shares up by 0.3%. Dell shares up by 1.2% so far this morning. Let's jump around to streamers. Netflix, yeah, continuing under pressure for Netflix shares, down by 0.5% right now. All right, let's jump back to some economic news. So we got GDP. We also got initial jobless claims. Initial claims down by 5,000 to 229,000. The more important number, if you're keeping track of the economy, would be continuing claims. Those numbers also going down to 1.95 million in the previous week. Continuing claims 1 week delayed. I mean, where's the uproar over that, right? There's no reason why we can't have a better updated continuing claims number. I mean, if you know the initial claims, anyway. I found this part interesting, and just one commentary piece from the Bloomberg article. Businesses so far have been reluctant to cut staff on large scale, but they've pulled back on hiring. I found myself saying, you know, as these companies pull back on hiring, if you watch the show often, folks, a couple days ago, we were talking about one of the articles where you could really see the impact of AI. If you recall, we were talking about a story of the age groups of people who were hired in certain sectors like customer service, programming, product development, something like that, programming, I think. And you could see that the younger age group was really struggling to have employment. And what I would say that is, it's going to be interesting to see if continuing claims are not as indicative of the difficulty that young workers may have right now in the job market. And I'm not saying this is forever and the economy's done, okay? But right now, an entry force level worker in certain sectors especially is facing a lot of headwinds for obvious reasons. And when you come out of college and you're in your 20s and you haven't even had a job yet, potentially, you're coming out of school, you don't just come out of school and go right onto unemployment. So it's going to be interesting if even the first leg of workers are really struggling, and that's the first indication, and they might not show up on continuing. Now, as AI works its way through companies, yes. Okay, it's not just going to be the new workers, because guess what? They're going to be the best trained, and they're going to be the cheapest labor. That's how it works, right? You get rid of the old workers that aren't as up to date on technology. They've accrued better salaries, pensions. Not the case anymore, but to a same degree, yes, salaries, all that. You hire a new worker, right? They're right out of college. They're technologically savvy in the AI world. And yes, eventually they'll hit. But I found myself saying, you know, what if it's just companies not hiring as much? And we're going to see that play out to a certain degree. The 4-week moving average, about 228,000, right where we are right now. And yeah, this is why there's volatility still priced in this equity, okay? If you're trading these equities, folks, you have risk today. Period. Even the options, sometimes, folks, you get a quick move, man. Don't be afraid to take that move immediately. Now, you want to go next level. okay? And this is really actively trading a position, okay? And I'll pull up the hypotheticals afterwards. But if you were following the show yesterday, we were doing a few things, right? We were selling a call spread above the market, maybe at 185. We were saying theoretically, maybe you were setting up this box. And you said, what if you're going to stay in this box? Right? What did I back it up? Like something like this? I think it was even daily. Yeah, it was a daily because I was looking at the volume from where we were at the highs. Now, when you made it up to that 185 area, folks, okay, even if you had traded the four-legged trade, you can always take one side of the trade off. Now, with risk and with reward comes risk-reward, right? You're adding some risk there for the potential for more reward. But what you do is you say to yourself, okay, I've given myself a range. We've spiked to 185. Now what I'm going to do is, right, I'm going to close out one portion of the trade, and I'm going to look for the bearish slide. Okay? And there's, all right, we'll pay attention to the video, slight give back. All things considered, though, we're right back to where we were yesterday morning on the video shares. They digest a small miss when it comes to data center. Omada Health moving higher. Take a look at that one for the Den. Yeah, look at that move yesterday. You're breaking above these recent highs with volume. August 27th, you do almost 550,000 shares. You get above anything we were at 22. And look at that. Even on the pullback after their earnings, right? You trade higher coming into that number. You pull back on a little lighter volume. Since then, we can see a little bit more volume above. But that was a nice day yesterday. Let's put it on a weekly for this new equity. All right, you want to see a little bit more volume on a weekly from that extension. Let's check out the gold and the silver market. Gold up by 0.3% right now as the pressure is on the downside on rates. We take a look at silver. We got some silver bulls in the den, baby. Get it going, Mike. We got the silver bulls. Silver up by 1%. Let's take a look at the weekly. Yeah, it looks like 40's in the cards for silver, man. We're right there. Got some of the silver stocks. AG up by 0.4% right now, pushing recent highs. Look at Hecla. Quite a tear for Hecla. What I will say, folks, is for some of these equities you're looking at in the gold market, my dad used to say it all the time, trade the heck out of them, but don't just buy it and hold it. You buy the metal and you hold the metal. Put these charts on a monthly and go back and we'll finish this up. And maybe you say it's different this time, but maybe it's not. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's up by 6, NASDAQ 100 up by 94. We check back in on the volatility. NVIDIA almost flat right now. Drive higher, dip lower. NVIDIA shares down by 49 pennies at 181. You got the tech stocks trading higher right now. Be interesting to see. You see Microsoft up by 0.4%, Amazon up by 0.6%, right? Some of those spenders pulling back a bit. And yeah, Roz, how about Harmony? So Harmony out with their numbers, down by 8.5%. And, you know, I was kind of saying, folks, in terms of remind yourself of, and it's so important in terms of context, okay? When the market's just going up, it feels like it's never going to go down, right? When it's going down, it feels like never going to go up. Have a little historical context. Look at the runs that these equities have in the past and tell yourself and to ask yourself, is this time different? And it can always be different, okay? But the reason why that's an expression is because it rarely is different, right? History repeats. It may not repeat, but it rhymes. And yeah, at some point you see an extension, you see the volatility, and you see the longer term charts. And folks, we're not talking about small pullbacks, okay? I'm talking about from $11 to $1, to $11 to $1, to $8 to $1, to $9 to $3. And we're approaching 8, you know, you might have room to run. Just put that one in your memory bank, okay? For everything that's trading on these equities. Now, you take a look at Harmony. Well, what did Harmony just do? We traded back into the highs of 23 years ago. And yes, you have much more volume. But look at the volatility here. Not quite as pronounced. But you're talking about a run from above where we were right now in 2011 to 50 cents. In 2016, to a price tag of $2 in 2022, okay? And now you have this equity on a 5-day basis down from 16. Harmony's a great equity, folks. All right, it's been a heck of a run. But you're now down from where we were in April over the last 4.5 months, from 19 to 13. 1877 to 1327. That's not how it's usually supposed to operate, folks. So be careful on some of these miners because they have a habit of getting over their skis. But yeah, and it's been a heck of a run. You look at AEM breaking out of its channel line to the upside, right? On a weekly basis, all-time highs, 140.41. Look at the volume, though, on some of these equities. Okay, this is a monthly. Lower, lower, lower. It's going to be lower, folks, again. Meanwhile, we've traded from 120 to 140 over that period of time. Some of the other ones are absolutely on fire. New gold. Again, we're going to have less volume as we take it out this month. Okay, tomorrow's the last trading day of the month. New gold's done 243 million versus 333 last month on their pullback. Now, if you had caught a bid on volume, it would have been beautiful because the pullback on lighter volume, and yeah, that was a heck of a volume run for this equity. But we're getting above the 1-to-1. You're barely up to the 1 to 618. Okay, 1 to 1.618 expansion. And even with the wind at gold's back, because you're going to be facing lower rates and a weaker dollar, that battle is not just over just yet. And I think we might have more consolidating to do. As you look, dollar sits at 98. When you look at some of these numbers, you would really like to see gold take out, right? Boy, in an ideal world, you want to see it take out this weekly bar from April 21st. You want to see it take out the bar from June 9th, June 16th. That was 982,848. We did 674 last week. And yeah, we might see some decent numbers. Just looking at the numbers to add them up, you're talking about 100, 270, 420, 550 right now on the weekly. Okay. Going to be tough to come in at 817 though, and very tough to come in at 982. We get some resistance at this 3,500 price point, and we're right there. It's a perplexing situation, but sometimes the market gets ahead of itself. And don't think that the gold market doesn't already know that there's 2 to 3 cuts priced in this year. The dollar's traded from 110 to 98. Some of that is already priced in. And yeah, be careful of the miners and owning the miners. When you look at this equity, okay, Harmony is only up 30% from where we were trading at on April 8th of last year. Gold is up $1,100 from $2,300 to $3,400 over that period of time. Okay? When you look at equities in like the XAU and you put it on the monthly, yeah. We just went from 38 to 242. You just went from $92 in 2022. The run in gold began at 100 in February of 2024. And the most recent run, you just added over $100. HUI pretty similar, but didn't get above those all-time highs actually, as you're sitting at $500 from 200. All right, let's take a look at some of the home builders. Lennar off by 0.8% right now. D.R. Horton off by 0.4% right now. KB Homes off by 1% right now. Check in Home Depot, down by 0.3% right now. Lowe's. Check out some retailers. Walmart basically flat. Target down by 0.7%. Yeah, Target's got some problems. That's a tough looking chart, folks. Okay. Sometimes it's not rocket science, baby. You're coming into the lows, and you're doing it with momentum on Target. And hey, you know, maybe this will be a heck of a buying opportunity when this thing comes down to the 2017 lows of $50, or maybe you come down to the 2018 lows. But we're already at the COVID lows, man. And it looks like this thing's got to complete this whole symmetrical situation, and that gets you back to prices that you were trading at in almost 2002. Don't think it can't happen, folks. We just traded from 270 down to 97. Okay? And, you know, sometimes that's what equity has to do. You look at Walmart. From 1999 to almost 2017. And you weren't far off from that price tag. As in from $22 and COVID, you came into it around 40 on those lows. All right, folks. Market rolling over a bit. We got a little selling. One more segment. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And we got a little selling right now. We get the S&Ps off by 6. And yeah, we're about 18 points of those highs. And you're talking about highs within 1/4 of 1 point of all-time highs, folks, on the S&Ps. Is that right? Let me make sure. Yeah, 65.0875. And we got to 65.0850. As close as you can get. They only tick at 25 pennies. We jump back to NVIDIA shares right now. Yeah, and I don't want to say picking up steam, as this thing, you can see even the move yesterday. But yeah, investors saying, you know what? And you can't emphasize how extraordinary this company is. But again, they just added almost $2.5 trillion in market cap in the last 120 days. 120 days. You better believe expectations are sky high. And then what I heard, I'm talking about AI infrastructure spend throughout the decade. It's going to be 3 to 4 trillion, and our company is valued at 4 trillion plus. I was like, wait a second. If you capture every single dollar spent of AI infrastructure spend, and they're getting a lot of it, okay, for the whole decade, they're going to face competitors at some point. All right. And then let's talk a little bit of trains to finish it up. Amtrak. What happened? We need infrastructure week, man. And we need it with like taxes that don't just like add it to the debt, and somehow infrastructure week's going to grow the economy enough that all the debt projections don't matter. We need some infrastructure, man. You know, Europe gets a lot of grief for all their taxes, rightfully so on a many occasion, okay? And yeah, that's exactly what we're going to talk about, Duffy. It's not the train, it's the rails. We need infrastructure. So this one, folks, okay? Amtrak's new trains, they're here. But it's going to take longer than it did on the old trains because the infrastructure. Yeah, can reach 160 miles an hour, 10 miles faster. But guess what? They're taking longer because they're on old tracks that are everywhere, all over the country. Those tracks used for everything. I'll post that one on the Den. It's an interesting one. Folks, thanks so much for kicking off your trading day right here. Yeah, I was on the bullet train in Japan